Hey everybody, this is Greg Gossett and welcome to the weekend edition of the Gossett Trading and Mentoring Podcast. In this podcast, here's the format for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back, take a look at my current positions from last week, any trades that I made, talk about when I bought them, why I bought them, and most importantly, how I am going to manage the trade going forward. After that, we are going to do a segment on trader psychology. Most important skill in the world when it comes to trading is the ability to follow your plan and your process. And, you know, it seems easy when the market's not open. Okay, if it does this, I'm going to do that. And if that, I'm going to do this. But when the lights start blinking and money starts flowing, gains, losses, you know, it can destabilize someone. And I've mentioned this before, you know, learning to trade, learning to look for support, resistance, good risk to reward ratio setups, you know, scaling out your stop losses. Yeah, I mean, you have to learn it, right? You do have to learn it, but it's not that difficult. And I can promise you, I've been trading for almost 28 years now. The real skill comes in just following your plan, planning your trade, and trading what your plan is. So we'd like to talk about that. After that, going to do a quick poem from my friend Frank, the trading poet. Always has a great poem, and it's always pertinent to what's going on in the market. After that, I have gone down through my watch list, and I have identified about 13 different symbols that are of interest to me next week. So we're going to go over those. Usually, you know, when I do these podcasts on the weekend, the price either has to go higher or lower for me to get interested in taking the trade. So I'll explain all of that, and I'll just take a look and we'll go down through each one, and I'll identify what I'm looking for as far as potential trade next week. Boy, the market has been something. It has been something. It has been vicious. It's been brutal. The sell-off has been historic. You know, everything revolves right now around the Federal Reserve and what they're doing. There are a lot of people hoping that there's going to be a pivot in the market. There's been some calls from Bank of America, some calls from the UN as far as demanding actually that the Federal Reserve start reducing what they are going to be raising. I don't know if it's falling on deaf ears, but everything right now is about the Fed. I mean, we have a perfect storm. What's going on here? We have rising commodity prices, oil certainly. We have, it looks like, you know, we're very close to being in recession. We have the Fed raising interest rates into the into the potential recession. We have geopolitical risks, all sorts of stuff going on. My gosh, really all sorts of stuff going on. Are we going to bounce? I don't know. I really don't know. My best advice, everyone, is just to follow your signals. Follow your plan, follow your signals, position size correctly based upon the volatility. No one knows. No one knows. Yes, we are low for sure, but we can certainly go lower. There are times where low just gets lower, where oversold gets more oversold. So I think you have to pick your levels, and if they're breached, if they're violated, get out, wait for them to be retaken again. That's really my best advice. I know it's scary out there. I speak to a lot of people. I speak to a lot of traders. A lot of people are scared, wondering, you know, are we just going to crash? I mean, who knows? You know, I wish I knew. If I knew, I promise I would tell you. But like I said, the best thing that we can do right now is just follow our plans. This is pretty historic. Totally oversold, but are we going to bounce or not? I don't know. I really don't know. So anyway, I'm going to run and we'll get into all of that. We'll take a look at the charts, all and the trades that I had. But first I have to run the U.S. legal disclaimer. I'll be back in about 40 seconds. So hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Thanks for holding through that with me. All right. So this week, actually Friday, I got out of two positions, but we'll go through them. Let's go through my only current open position at the moment. All right. So this was UNG, United States Natural Gas Fund. I did buy UNG back here on the 3rd of October. Had a nice confluence of signals, had an under 30, over 30. So intraday it went under 30 and then closed back over 30. Also closed back above the 200-day moving average. That's my line in the sand. Got long here at 22.39. It's 22.94. Of course, whenever I buy something, I always play offense and get out of a portion of my position once it moves up the distance of the 0.44 from the previous day's close. So currently right now we're at 22.94. I will put limit orders in. You can see the 0.45 ATR is 0.66. So I'll add 22.94, add to the 0.66. That will be my first profit target on Monday. I'll take the first profit target, add the 0.66 again to it as well. That's my second profit target. I'll take the second profit target, add the 0.66 to it. On top of that, that will give me my 3 profit targets. So I always place 3 limit orders based upon taking the closing price, adding the value of the 0.45 ATRs, and that's how I phase out when the market is going my way. So you can see here I bought at 22.39. Next day, hit 2 profit targets. Next day, can't remember on this one. Next day here, can't remember on this one. Actually, to be honest with you, it's very, very close whether or not I had a profit target or not. But when the market gives you something, I like to take something away, right? I was taught that by Dr. Alexander Elder, Carrie Lavorne, regret minimization, because as you can see, I mean, it's come down. We're still profitable on the trade here. Right about 2.09%. It was up much, much higher. But again, as it moved up, I took partial profits. Now, my end of day stop here is going to be a close below the 200-day moving average. So it's still holding above the 200-day moving average, the black line. If it closes below there, that's the end of the trade. Now, I have the orange line up here. This is 1.5 ATR distance from my entry. Once I take a trade and it moves 1.5 ATRs from my entry, above my entry, or below my entry if I'm short, then I go into trailing stop mode. Now you can see the price did not get to the 1.5 ATRs. Had it gotten there with this close below the previous day's low, I would have exited half of my position, but because it did not get there, I did not exit. So line in the sand here, 200-day moving average, still thankfully up on the trade. Now, of course, with any trade, I always have 2 stops. I have my end of day stop, which is just reversing why I took the trade. If I took the trade based upon a close over the 200-day moving average, then I get out if I have a close below the 200-day moving average. But I also put in a 2 ATR stop below my entry. And just want to go through this with you real quick, but I always talk about position sizing based upon volatility. So how do you do that? Well, kind of a good quick rule of thumb is, if you have $100,000, 1% of $100,000 is $1,000, right? If you have a $50,000 account, then 1% is $500. What I do, if you have $1 million, it's $10,000. What I do is I take what my maximum allowed loss is. I take the 1%, 1% of 100,000 is $1,000, $1,000. I divide it by the value of the 2 ATR. Right now it's 2.92. So if I was just entering this trade right here, I would divide that by 2.92, and that would tell me to buy 342 shares. Now I also put my emergency stop 2 ATRs below. So if I have 342 shares and it moves $2.92, how much is it? It's $1,000. So my emergency stop is down here. I usually get out of my trades at the end of the day, because the end of the day, I feel like the smart money, the large financial institutions make their move at the end of the day. I think it's the most valid price of the day. So, but if the price were to get to my emergency stop, I would get out whether it was 1 minute after the market opened or 1 minute when the market closed, because you have to have a dollar amount where you just say, okay, I'm just wrong. That's it. I'm wrong. And I'm not going to wait till the end of the day, because by the end of the day, it could be down here, right? So always two stops whenever I enter a trade. End of day, emergency stop, which is always 2 ATRs below my entry. End of day stop is why did I get into the trade? If that untriggers, then I'm going to get out of the trade. So if I buy an under 30 over 30 and then it closes below 30, I'm going to get out. If I buy an under over 200, if it closes under the 200, I'm going to get out. So about 95% of the time, your end of day stop will come into play, but there are days and there are times where you do hit your emergency stop, but you have to position size so that you know exactly how much you're losing if in the unlikely situation that you do hit your emergency stop. So anyway, that's UNG up 2.09% on the trade, and actually up a little bit more than that, right? Because again, as the stock moves up, I always take partial profits, and I did take some partial profits on some strength, which is great, right? Market can't take that away from me. Even if it closes down, it helps mitigate a loss. So that's why I'm really a big fan of taking partial profits as it moves my way. And then of course, having rules with emergency stops, end of day stops, trailing stops. And, in this podcast, I try to quickly go over, where I'm entering, why I'm entering, what I'm doing. I don't have time to completely go through all the rules of all the 5 different trading approaches that I use, but I do teach private one-on-one lessons in the evening time via Skype. I think it's a great course. I think the best way to learn anything is one-on-one with your instructor. So if there's an interest, my email is in the description of this video, and I'll talk more about the lessons at the end of the podcast. Okay, so anyway, that's UNG, under 30 over 30, close back over the 200-day moving average. Nice confluence of signals, and lucky that this trade is currently up 2.09%. Okay, Qs. Well, a lot of rules came in here for me on the Qs. I did buy the Qs here on October 3rd when we had a close under 30 and then a close back over 30. Also a V2 entry here. I did buy at 272.60. And as always, I put my emergency stops 2 ATRs below. What's my end of day stop? My end of day stop, I bought an under 30 over 30. So if it closed back under 30, I would get out of the trade. However, something happened here which changed those rules. You can see my 1.5 ATR from entry up here, and you see how we touched it. What was that? Here's Friday, Thursday, Wednesday, Monday, Tuesday. Okay, so Wednesday and Thursday did get to my trailing stop level. Now, if I buy an under 30 over 30, and it moves 1.5 ATRs from my entry, if it ever gets back to my entry point, I'm going to get out of the position. And that's exactly what I did, right? Bought here at 272.60. It moved up 1.5 ATRs. Things were going good on Monday and Tuesday, right? We had the up. But because it reached my trailing stop level of 1.5 ATRs, when it got back to my even entry point at 272.60 on Friday, I got rid of the position, because that's the rule. If I have an under 30 over 30 and it moves 1.5 ATRs from my entry, but then it comes back to my entry point, I got out during the morning because it got back there to my entry point. And why do I do that? Well, if you take an under 30 over 30 and it moves 1.5 ATRs, it's moved outside of noise. It should not come back to your entry point. And, it could come back to maybe a half ATR, a full ATR, because that's expected. But to move more than 1 ATR down is outside of noise, and it's a bad sign. So anyway, was this a profitable trade? It was. Why? Well, because on the big moves up here, I took 20% of the trade off based upon the intraday profit targets, the 0.45 ATR profit targets that I was talking about. Whenever the market gives me anything, at least 0.45 ATR move, I'm going to take something, and I'm glad I took 20% of this trade off. The 80% was nicely up in the money as well, but I took the 80% back off when it got to my break even. So all in all, still a profitable trade. And but I had to follow my rules, and Monday we can go racing up and be like, oh, those dang rules. But sometimes the rules are going to work for you, sometimes they're not, but you have to be consistent with them. So break even on the QQQ trade. Twitter. Well, Twitter was a monster trade, actually. I bought Twitter all the way back here on September 13th. When we came intraday, it got very close to the 200-day moving average. I bought it here at 40.44. And then we moved up 1.5 ATRs from my entry here on this bar on the 30th. And if I move 1.5 ATRs from my entry and then I get a close below the previous day's low, I get out of half. So I did get out of half here right about, oh, here's the line right here, 42.59. Got in at 40.62, got out at 42.69, sold half. And then the next day, boom, we had the big Twitter news, went racing up. I did exit right here at the close of Twitter on this day. Now, why did I exit? It didn't reject anything. It was such a big bar up. It was up 20%, over 20% on that day. It got to the 6 ATR channel. There's always a lot of headline risk associated with Elon Musk and Twitter. And it was such a big day. I was like, you know, this is probably as far as it's going to go. And it did. That was it. And then the next few days, it did come down. But on that second half, made 21.76%. Amazing. Amazing. You know, and it's a good lesson to learn. The reason I was tracking Twitter is that Twitter has been so relatively strong compared to the rest of the market. And that is a real clue, everyone. If you see a stock that's not going down while the rest of the market's going down, that is more likely to go up than down, especially if the market turns. That one's going to go up more or probably quicker than the stocks that are weakest. So I always like to look for relative strength compared to the rest of the market. So great trade on Twitter here. That second half got out for a profit of 21.76%. All right, last one, Amazon. Very similar market action to Twitter, or not Twitter, but the Qs. I bought this back here on the 26th of September with an under 30, intraday under 30, over 30, and intraday rejection of the negative third ATR channel. Bought at 114.97. Place my emergency stop 2 ATR below. Place my trailing stop 1.5 ATRs above. Kind of moved sideways. This day here took some nice profits, took some partial profits off. This day here on Tuesday took some nice profits off again, using the intraday profit targets. Then we moved sideways, and then boom. When it got back to my entry point, I got out. Why? Because I had an under 30, over 30. It moved to 1.5 ATRs above my entry point. If that happens, and then it comes back to my entry point, I got out at even. All right, let's talk a little bit about trader psychology. This is from the Divergent Trader, Alan Edwards, one of my favorite posters. You can follow him at Trader Divergent over on Twitter. I really recommend that you do. He has great posts. They're succinct and short, but they always carry a lot of wisdom and things to think about. Let's see what he has to say. A real trading is knowing what to do when there is nothing to do. Short and sweet, right? But there's so much wisdom in this. Knowing what to do when there is nothing to do. Well, listen, with the market being down so far, it's tempting to want to go in and catch this bottom, right? But my suggestion, my best advice for how I trade, and this is how I'm handling it, is to not do anything when there is nothing to do. You saw a few of those trades that I just had there. Yeah, I could hold on to them, and yes, we could bounce this week, but I'd rather just wait for a proper new setup before I take this. And this is a mental thing, knowing what to do when there is nothing to do. If there's nothing to do, sit on your hands. Literally sit on your hands. Don't do anything until you get a proper signal. I know in trading, okay, we're traders. If we're not trading, if you're like, hey, we're not trading, we're not doing anything, this is my job, I should be trading. Well, the best traders don't do anything until there is something to do. Please remember that. Just if you don't have a setup and a stock's at $90, you love it at $90 and it's at $80, how do you get out of it at $80 if you loved it at $90? What about if it goes to $70? How do you get out of it at $70 if you loved it at $90? That's why you need levels, everyone, to say, look, if it's below this line, if it's below this level, I get out, because that's how you can get caught into a huge, big move down that is so hard to get out of. So really the reason to do nothing when there's nothing to do is because then you don't really have a setup. You don't have your levels. So take my advice, sit on your hands, wait for a proper signal before you get into a trade. So thank you, Trader Divergent. Really appreciate that. You can follow him at Trader Divergent over on Twitter. All right, before we get to the watch list and the potential trades for next week, I want to do a quick poem from Frank. You can follow him at FrancoDI on Twitter. Great guy, great trader, great musician, great poet, great author, great journalist. Just a great guy. And I always like to highlight Frank's poems on these podcasts because they're pertinent and they rhyme. Today's market poem: the final quarter and the days grow short. Yes, we're in the final quarter of the year. Even market rallies offer little comfort. Trading is your money. It's not a game or a sport. The lines are drawn between resistance and support. Isn't that good? The final quarter and the days grow short. Even market rallies offer little comfort. Trading is your money. It's not a game or sport. The lines are drawn between resistance and support. And resistance, support, right? We want to buy at resistance. We want to sell. We want to buy at support and we want to sell at resistance. Or in other words, we need to have a plan. So, this is a brutal market. It seems unprecedented. There's a lot of fear out there. The smart thing to do, wait for your signals, a valid signal, take the signal. It's going to do what it's going to do, position size properly. And if you're wrong, you're wrong. That's what it is. But position sizing is so important here because the market is very volatile. So thank you very much, Frank. Appreciate that. And we'll do another one next weekend. All right. Let's get to potentials for next week. Apple. Well, Apple has had a tough go of it lately. My gosh, it's at $140, down 3.6%. Let's first of all take a look at the weekly. I like to look at the weeklies for support, taking the trades on the daily. On the weekly, we're not that great. We're below the value zone. The green line is the bottom of the value zone. On the weeklies, they have to be decent. They don't have to be perfect. The dailies have to be perfect, but it's okay. We're down here. If we look at if we throw a Fibonacci on it down here, we have lost the 61.8 retracement from the low to the high. That's not very encouraging, actually, but the daily, not too bad, actually. Right now, we're at 35.51. What I'm looking for would be an under 30, over 30 on Apple. That would place us right about here, the low from last week. That would get us to a 30 RSI, would also get us to a negative third ATR channel. I like the confluence of having a negative third ATR channel because 92% of prices tend to bounce here. You can see here's a third ATR channel, bounce. Here's the third ATR channel, bounce. If we get a confluence next week of Apple, I don't know if we will or not, but if we do, if we get an under 30, over 30, we will also reject this negative third ATR channel, and that's what I would be looking for on a company like Apple. Now, it might just go up and miss the trade. That's okay. But again, for Apple next week, I am looking for it to go down, for an under 30, over 30. That would be my setup. Carnival Cruise Line, my gosh, let's take a look at the weekly here. What I like about the weekly is that we have a double bottom with the bullish divergence. Here's the low with deep red MACD bars to the downside. We rally into some green MACD. Now we've come back down. We are lower than the previous low, but do you see how we have no red MACD? That's called a double bottom with double bottom with a bullish divergence and a missing right shoulder. This was a dramatic move down. MACD measures momentum. The momentum was very, very strong to the downside. We rallied. Now we've come back down again, but you see how there's no red? So from a MACD perspective, this move down, even though it looks strong, was not anything was not comparably strong to this move here, and the implication is that we are running out of selling. So I do like the weekly very much with this double bottom bullish divergence. Now let's turn to the daily. Carnival. I mean, my gosh, just a couple weeks ago, Carnival was $11.16. Now it's $6.76. My gosh. Now it did have an under 30 over 30 already. And it has moved down since that, not in the trade, but we're at a 32.31. If we get another under 30 over 30 on CCL, a Carnival Cruise Line next week, that will be my entry, really based upon the weekly having the double bottom and the bullish divergence. So, is Carnival Cruise Line going to stay in business? I don't know. I would imagine that they would. We've gone through the hurricane, all this kind of stuff. So kind of a really bad time for Carnival and a lot of other stocks as well. But again, I do like the double bottom bullish divergence here on the weekly. And then on the daily here, we're at a 32.31. We are still holding that 30 RSI. So no trade yet, but if I get another under 30 over 30, I would get long Carnival Cruise Line. The Dow, DIA. So we lost the 200-week moving average on the Dow. We haven't made a new low. Well, we made a new low from this pivot over here, but we haven't made a new low from last week. But we're hovering around the 200-day moving average. We could certainly move back up. But if we look back over on the daily here, we're at 38.56. And next week, an under 30 over 30 would definitely get me interested in the Dow. One of the things I wanted to point out here, look at the volume on Friday. Such a huge move down, such little volume. That's interesting to me, and it's the same with the Qs and the SPY. So anyway, on the weekly here, it's okay. It's hanging around the 200-day moving average. Let's look at the monthly. Monthly holding the 50-month moving average and the 50 EMA. That's good. That's a significant pullback, and the 50 EMA and the 50 SMA have held. I always like to look at multiple time frame for support. So I like the monthly. The weeklies, it's okay. But the daily, if we got another under 30 over 30 on the diamonds, it would also put us down here near the negative third ATR channel, and we would have a double bottom and bullish divergence as well. See the move down here, see the red bars. We rallied a couple days last week. We got green. If we come back down even to the lows, we are probably not even going to have any green MACD. So again, double bottom bullish divergence with a missing right shoulder. So there are some bullish things going on here, big picture. I know it's scary in the moment, but look at the bigger picture. There's support on the monthly at the 50 EMA and 50 SMA. On the weekly, kind of neutral. On the daily, it's not there yet, but an under 30 over 30 with a double bottom bullish divergence and a rejection of the negative third ATR channel, I think would be attractive. Intel, well, you can see again, let's look at the weekly. Weekly is below the negative third ATR channel, not so great. We're getting close to the negative 4 ATR channel. Let's look at the monthly. Monthly, I kind of like because we have support of the 250 monthly SMA and the 300 here, getting very, very close to that. So I really do like to look at these three time frames. So the monthly, I like. It has support of the 250 and the 300. The weekly, kind of neutral, but getting close to the negative 4 ATR channel. And then on the daily, we have this double bottom bullish divergence forming. We're at a 29.59 RSI. We're at the negative third ATR channel. So if we have a move up and close back above 30 RSI on Intel, that will get me long next week on Intel based upon the monthly, right, with the 250 and the 300 SMA below as possible support. Weekly is kind of neutral, and the daily, I like double bottom bullish divergence, missing right shoulder at the negative third ATR channel, and looking for an under 30, which we are. We're 29.59. If it closed above 30, that would be my entry point. All right, next on deck is McDonald's, MCD. Well, let's take a look at the monthly. Monthly's hanging in the value zone, still above 50 RSI, which I like. The weekly, holding this pivot over here, we did lose the 100 week moving average. That is somewhat neutral, but on the daily here, I do like McDonald's. We made the low, we bounced. Yes, we have pulled back here to the negative third ATR channel, but what I'm looking for, as like with a lot of these stocks next week, if we go under 30, over 30, that will be my entry on McDonald's. Meta, let's take a look at the month at the negative third ATR channel on the monthly chart. I like that. If we go to the weekly, double bottom bullish divergence. Here we have a low with some red. We rally into lots of green. We've come back down. We've made a lower low, but there is no red yet. So this is a double bottom bullish divergence on the weekly. On the daily, we have a double bottom bullish divergence as well. Here's the low, very close to the low. Deep red MACD bars rallied into green, coming back down here. Yep, it is a double bottom bullish divergence. It did test the low, but there's no red here. See, that's a double bottom bullish divergence, missing right shoulder again. It's a bullish big picture setup. 34.28, even though we have the double bottom and the bullish divergence, I still have to wait for the proper signal. Remember what I talked about in trader psychology, not doing anything until there's something to do? Well, there's nothing to do here yet because there's no entry. I need an under 30, over 30 on Meta. Nike, let's look at the monthly. Monthly holding support at the 100 month moving average. I like that. If we look at the weekly, we did go under 30 RSI, over 30 RSI on the weekly. I do like that. On the daily, we're at a 33.89 RSI. So what I'm looking for, we already had an under 30, over 30, which did work for a couple days and then come back down. I'm looking for another under 30, over 30, and ideally a higher low under 30, over 30. This is a lower low, under 30, over 30. If we were to come back down, go under 30 and then over 30, that would be a higher low under 30, over 30, and I always like those better for the bullish case. Pfizer, let's look at the monthly. Monthly, pretty strong right here in the value zone, like that. Weekly, neutral, not so great, but on the daily, this was a legitimate entry for the daily on Friday. We went intraday under 30, over 30. We had an intraday rejection of the negative third ATR channel. Again, double bottom bullish divergence. Here's the low with the deep red. Rally into some green, come lower, less red than over here. So we have a double bottom bullish divergence. That, like I said, this would have been a legitimate entry on Friday because it went under 30, over 30. Intraday rejected the negative third ATR channel as well. What I would be looking for next week on Pfizer would just simply be another under 30, over 30. Next on deck, Philip Morris. Let's look at the monthly. Monthly holding the negative 1 ATR channel in the value zone. I like that. On the weekly, neutral. A lot of these weeklies have been neutral. On the daily, we're at 33.11. We already went under 30, over 30, and this is just like Pfizer. I'm looking for another intraday rejection of the 30 RSI or a close under, close back over, and ideally if it's a higher low, if it doesn't breach this, if it goes under 30 and then back over 30, but it's still higher than this low here. So that's what I'm looking for on Philip Morris, is an under 30, over 30, and another rejection of the negative third ATR channel. Here's the Qs. Let's look at the Qs, everyone. On the monthly, pretty good. I mean, really good, actually. Holding the 50-month moving average. So big picture, that's a decent sign that that level is holding. If we look at the weekly, we did lose the 200-week moving average, but we do have a double bottom and a bullish divergence here. Here's the low, deep red. We rally into green. Yes, we come back down. It is red, but not as deep as the first red, so there are some divergences happening there. And then on the daily, Well, we're at a 35.87. Don't know if this is going to get there or not, but if we go under 30, over 30, based upon the monthly chart looking good, the weekly chart looking good, and on the daily here, again, and it's 35.87. It's above 30 RSI, so the signal is not there yet. But if we do get there, I'm going to like that, and I am definitely going to buy that. Interesting, again, the volume on Friday, just anemic. With such a big move down, but just anemic. That's interesting. If this came on a lot of strong volume, that would be more concerning. But I do like the fact that we moved down on low volume, that there wasn't a lot of participation in that. SPY, it's going to be very similar. You can see the SPY on the monthly has support of the 50 EMA. I like that. On the weekly, SPY stronger than the Qs because it's still holding above the 200, so I do like the weekly. And then on the daily, yep, you guessed it, it's a 37.76 RSI. What am I waiting for? I would be waiting for an under 30, over 30. I can already tell, though, this low here with the deep red, we've rallied into green. If we come back down, we are going to have a double bottom with the bullish divergence and a missing right shoulder. But the setup on the monthly and the weekly, I like them. But on the daily, we still need that trigger, and the trigger is the under 30, over 30. TLT, my gosh, bonds have just gotten hammered here, boys and girls. Let's look at the weekly. Look at the monthly. Monthly is at the 200-month moving average, slightly below it, but holding right there. We're also at $100.99. I mean, we're very close to that important psychological level of 100. But monthly looks pretty decent here. Hasn't pulled away from the 200-month moving average. Weekly, we're the negative third ATR channel. We have a double bottom bullish divergence. Here's the low, deep red MACD. We rallied into green. We came back. We made a lower low on lower MACD. So the momentum, selling momentum, even though it's a substantial move down, the selling momentum from a MACD standpoint is waning. So the implication is that we could be running out of sellers. And then as far as taking the trade, I would be looking, it's 33.77 right now. I would be looking for an under 30, over 30 based upon the monthly, based upon the weekly, and making my trade on the daily. And the daily, we also are working on a double bottom bullish divergence. Here we have a low, deep red. We rally into some green, a little bit right there. We have coming back down. We have not tested that low, but less MACD to the downside than this first low. So, and we also have an RSI divergence. Here's a low here. See how deep the RSI was? Even if we get back down now to that low, the RSI is not going to be as deep as that. So there's ATR divergence here. There's MACD divergence here. There are ATR channel divergences here as well. So what I'm looking for on TLT is an under 30, over 30. Natural gas. Well, I am in natural gas right now, but the reason I highlighted this was if this goes under the 200 intraday and then closes back over, that's a new entry signal for me. And if that happens, so if Monday, if we go under the 200 then close back over the 200, I will treat this as a new trade and add more shares, because when I originally took the trade here, I scaled out of some of the position here and into there. And so I will just, if we get another rejection of the 200-day moving average, that will be my signal to enter this trade again, but size up to the full, re-add the shares that I already have scaled out here. And if this would be a great trade for me, if we went under 200, over 200 again, it would be a higher low than this low. And again, like I mentioned previously, higher low rejections of RSIs, of moving averages, I like the best. Verizon, my gosh, what a monster. Look at this. Let's look at the monthly. Monthly, hanging around the third ATR channel, holding the 30 RSI. Weekly, okay, nothing to write home about. On the daily, however, look, we have a double bottom, bullish divergent, missing right shoulder. We have a low with deep red MACD bars. We rally into green. We have come back down. We made a lower low. We've made a new low. No red MACD. That is a good sign. We're at 31.33. If Verizon next week goes under 30, over 30, either intraday or a close under and close back over, I will buy Verizon. Very, very low. It has gotten hit very, very hard. But that's not why we're buying it, because it got hit very, very hard. I'm just saying it got hit very, very hard. So that's why we're down at these levels. And again, the monthly, we are holding the 30 RSI on the monthly. It's tough to get to a 30 RSI on a monthly, and we're there. Again, weekly, kind of neutral. On the daily here, just simply looking for an under 30, over 30, and if that happens, there would also be a rejection of the negative third ATR channel. And again, as I mentioned, on top of that, we have a double bottom bullish divergence, missing right shoulder. Last but not least, XLU. Okay, let's look at the monthly here. At the bottom of the value zone, we have the 50 EMA and the 50 SMA here as potential support. Weekly, holding the 200 week moving average. I like that. That's a lot of these charts have looked good on the monthly, not so great on the weekly. This one looks decent on the monthly because it's just in the value zone. On the weekly, I like that it's holding support of that 200 week moving average. And on the daily, just need an entry signal. We're 2807. If I get a close above the 30 RSI, that will be my signal to get into XLU. Okay, so at the beginning of the podcast, I talked a little bit about that I teach private one-on-one lessons in the evening time. Look, if you want to become a better trader, I think the best thing to do is you have to work with a professional trader. You have to work with someone that's been trading for a long time, knows what they're doing. I've been trading for a long time. I've been trading for 28 years. I love to teach. I've taught students from all around the world. I teach the 5 different trading approaches that I use. I teach you step by step everything. And it really is the best way to learn one-on-one, whether you're playing violin or playing tennis or learning to trade. Having a one-on-one coach and teacher, in my opinion, is the best way to learn trading properly from the beginning. So if you are interested, I do have a course in the evening time via Skype, 3 hours. Each session is 3 hours. There are 5 sessions that gives you a total of 15 hours, and the cost is $1,750, and it's worth every penny, every one. Like I said, I really do love to teach. I've really turned out some great traders. So if you're interested in doing this course with me, my email is in the link of this YouTube video. Just send me an email. Say, Greg, I'm potentially interested in taking your course. I will say, hey, that's fantastic. Let's set up a Skype call. I like to do Skype call with prospective students. It's not a sales call. I promise you that. There's none of that. There's absolutely no pressure. As a matter of fact, when we're done with the call, then it's on you to contact me back if you want to take the course. But I like to learn about a potential student, what their goals are, what their challenges are, and it's a great time for them to ask me specific questions about the course as well. So if you are interested, please reach out to me. Be nice to meet you on Skype, and I promise you, you'll be very happy that you took the course. Number 2, if you like online courses, I have a great online course at udemy.com. The link is in the description of this YouTube video. I teach you the deep dip buy stock trading strategy step by step. It's a great course. It has 9.5 hours of video. It has 26 videos. It has 15 study guides. And boy, if we are ever in deep dip buy land right now, it is now. It is here. That course is so relevant to exactly what the market's doing right now. And the best thing about that course, it costs like $12 or $15 on Udemy. That's it for all that content. And I've gotten so many good reviews from around the world. 5-star reviews on that course. I know you'll love it. So if you're interested this weekend, spend the $12 or $15, take the course, and I promise you it will be helpful for you. And then 2 more things. Number 3, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. Helps to keep the channel around, helps build the channel, lets YouTube know there's some valuable content here. So if you've learned anything valuable in this podcast or anything in the past, if you could just hit that like button or subscribe as well, I would really appreciate it. And then lastly, and the most important thing, everyone, please try to go out and do one nice thing for another human being today. It really would make the world a better place. There's days where you would be very happy and grateful that someone did something nice for you, and I think it's good karma. And if I could add one more request on top, if you could also go out and do something nice for an animal today, that's great karma, and animals appreciate acts of kindness as well. And maybe one day the animal or another human being, if you need it, will be there to help you as well. So that really is my most important message. Try to do something nice for another human being today. Try to do something nice for an animal today. You will get paid back in multiples, I promise you. Really, really, I believe that is true. So again, market's vicious. It's almost unprecedented. That's kind of a perfect storm out there. My best advice, everyone, sit on your hands, wait for a proper signal to develop, position size correctly, take the signal, and it's going to do what it's going to do. Eventually we will go up. I don't know when, I don't know where or why, but eventually I promise the market can't just go straight down, but wait for the proper signal. So I hope you enjoy your weekend. Hope you can get some exercise, do some deep breathing, do a little presence work, do that nice thing for a human, do the nice thing for the animal, right? Study your charts, but wait for proper signals. This is vicious, and make sure you position size correctly. And if you have any comments or questions, please leave them in the comment section, and I'll do my best to get to them. So on the way out, I have to run the U.S. legal disclaimer. Really appreciate you being here, and we'll see what next week brings for us. Take care, everyone. Appreciate your time. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.